Hey everyone, this is your weekly market outlook for the 24th of June 2024, obviously the last full trading week for the month of June. So let's get started with a quick recap of what's been going on last week. We have several interest rate decisions. Obviously the RBA is not moving anything, staying put at 4.35%. We have the US retail sales number. It was a little bit of a disappointment there. We have the UK CPI coming in as per expected. It's finally at 2%. Now we have the interest rate decision from the Swiss National Bank, and they cut 25 basis points. UK leave rates unchanged at this point in time in terms of how they're going to be moving forward here. Inflation is at 2%, but they really want to keep that interest rates a little bit higher for a little bit longer. We're still expecting a summer cut from the Bank of England here, so that's basically what the market has been pricing in. Surprise uptake on the retail sales number in the UK that does support the sterling a little bit. So overall, we do see a stronger dollar. That's pretty much on the effect from the previous week's number. But again, if we take a look at the overall stance here, we are currently looking at a potential diverging path on what's going on with the central banks in Europe as well as the US here. Well, US is still maintaining a higher for longer stance here. Swiss National Bank starting to cut rates. The ECB has started to cut rates. The Bank of England is about to cut interest rates as well. All right, so let's take a look at what's on for this week. We have the Canadian inflation number that's going to be released on Tuesday. We've got the Australian inflation number that's going to be released on Wednesday. We're expecting an inflation number to kind of drop down a little bit for Australia here, not by much, 3.6 to 3.5%. On Thursday, we're going to have our final GDP numbers for the US quarterly, and that's expected to pick up a little bit from 1.3 to 1.4%. Tokyo core CPI expected to jump up to 2%. This is still within the boundaries there, but I don't think it's going to be enough to signal an immediate rate hike coming out from the Bank of Japan there. Canadian GDP and the personal consumption expenditure number coming up from the US is going to wrap up for this week. All right, let's take a look at the technicals. Dollar index pretty stable here. The Aussie USD pretty stable here. They're still in range. 66 cents to 67 cents, as I've always mentioned pretty much throughout the whole month. We're expecting more or less a stable movement on the Australian dollar here. We're not expecting a drop below 65 cents. We're also not expecting a push above 67 cents. This is going to be the range here, and we can see the movement basically throughout the month of May and June, pretty much sticking to that 66-67 cents range. So this is a very stable currency, not a lot of volatility, which makes it difficult if you are going to be trading intraday and expecting a huge movement on the Aussie USD. This is not a currency for you. All right, moving on, we have the Euro USD. Euro USD, we warned about resistance at 1.09, 1.0850. Ever since then, we have seen a significant drop to the downside once it breaks below 1.08. One of the main drivers here on the drop on the euro is obviously the political turmoil that's going on in France at this point in time. There was a call for a snap election last week, and we saw that push lower on the Euro USD pretty much for the past about 1 week now for the Euro USD, about 1.5 weeks now on the Euro USD. We have transitioned back below the Ishimoku cloud. We have transitioned below 1.08. We're currently looking at support to start to build up around 1.06, 1.0650. We do have a little bit of another block there. So in terms of support, that lines up well enough with the weekly support 2 and weekly support 1. That's going to be at 1.0625 to 1.0650. This is going to be the expected support for the Euro USD. We have seen the Euro USD being pressured lower. I think there could be some profit taking going on here. We might potentially see a little bit of a bounce if price touches 1.0650 and 1.0625, and there was bias on the Euro USD there. That was pretty much around April low, so we're definitely keeping an eye out on the Euro USD around these levels there. There might be a potential bounce on the Euro USD. Now, for the Pound USD is very well supported. We're not below the Ishimoku cloud here. In terms of the political situations in the UK, it is much more stable at this point in time. So that does give a little bit of credence to the sterling there. And also in terms of the Bank of England, they're not really in a rush to start cutting interest rates. So that does support the sterling as well. Surprise retail sales number, which is good for the UK. That also supports the sterling. So right now we are looking at 1.26 to 1.2550 as the immediate support this week for sterling. We might actually see buyers come in there, and this is also in line with the support 2 and the support 1 on the weekly pivot there. So again, right now we are expecting the sterling to come in a little bit closer to 1.26. Now, if you remember from what we mentioned about 2 months ago, that was basically ever since the start of May, when price was continuing to push higher there, it was maintaining a position above 1.27. We expected a deeper pullback closer to 1.26. So now is about the right time. We are expecting buyers to come in around 1.2550, 1.26 level, and if there's a significant bounce off this level, that would actually confirm that was the demand level for the sterling here. So right now we're definitely keeping an eye out on the sterling. We're still above the Ishimoku cloud, so we still anticipate buyers to come in around 1.26 level. If that's the case, then we anticipate price to come back and test 1.27 once it bounces off 1.26, and potentially even higher. A return towards 1.28 is also a possibility for the sterling here. Now, lastly, we have the dollar Japanese yen. Dollar Japanese yen continues to gain higher. This is obviously on the back of a stronger US dollar. Now, we're now back at pretty much around 160. This is the level where a lot of traders are going to be a little bit more on the cautious side. This is the level where the Ministry of Finance in Japan and Bank of Japan actually intervenes. So 160 is definitely the level to watch out for. We're not expecting a lot of buyers at this point in time, but should it surpass 161 and we're not looking at any potential intervention, that could actually lift the dollar Japanese yen a little bit higher. In reality though, we expect a little bit of a sell-off around this level, around 160. In terms of where it could actually go, or in terms of how far the retracement is actually going to go, if we take a look at the support level that we have here, it's all pretty far down below 145, 146, 148, 152, and then the last one is 154.50. So how far down is the correction going to be? At this point in time, we're not expecting a return towards 154.50 if there's no intervention. If there's an intervention, then we expect 154.50 to be the level where the dollar Japanese yen could immediately drop to. Should there be no intervention and the market continues to just work itself out, any sell-off around 160, we might actually see a potential return around 158 to about 157. That's likely where the dollar Japanese yen could retrace to. Okay, so a little bit more on the cautious side if you're trading the dollar Japanese yen or any yen crosses for that matter. We do know that the euro yen and sterling yen is at all-time highs now, and also on the dollar Japanese yen, obviously the 160 levels is the key to watch out for. We do anticipate a little bit of profit taking to happen that could initiate that correction lower towards 157 and 158. So with that, good luck to trades for this week, and I will see you soon.